just, yeah, you can start.
Okay. Good afternoon, everyone. Today, our group will be presenting on the Indian pharmaceutical sector. And To start on with, I will start with a summary of the sector. So, when we compare Indian pharmaceutical firms, we notice that the cost structures are broadly similar. Most companies spend heavily on raw materials, R&D, and utilities. And what truly differentiates them are scale, geographic focus, and product specialization. So, for example, Sun Pharma stands out as the largest player with nearly 3,000 tons a year of production capacity, and the revenues for the firm are above 45,000 crore rupees. Uh, and its enterprise value of almost 2 lakh crore translates to the highest EV per ton capacity, highlighting its scale advantage. Moving on to Dr. Reddy's Laboratories, with about 2,200 tons per year and EV of 90,000 crores, has strategically expanded abroad, especially in Russia and other emerging markets. Next, we have Cipla, which produces around 1,800 tons annually with 22,000 crore revenues and is valued at around 80,000 crores and has primarily focused on international markets, particularly South Africa and other overseas markets. Other players diversify the landscape. For example, Mankind Pharma, which focuses on India and has built scale by emphasizing affordability and strong domestic distribution. And Divi's Laboratories focuses on APIs and contract manufacturing, making it a global supplier. Together, these companies show that Indian pharma is not one story but a mosaic. Some compete on scale and efficiency, like Sun Pharma and Cipla, and others on specialization and innovation. Uh, Moving on to growth outlook. So,
Now,
it,
Ariman,
yes, sir.
now, in pharma industry, so we have companies which are, manufacturing and selling generic products. And the other one is basically who are, doing a lot of research and innovative, products coming. So, have you any idea about, like Sun Pharma is what? Is it a generic company or is it a company which is producing, something which is totally branded or something, innovative?
Sir, they do innovate because they have a lot of spending on the research and development sector, and the revenue is also higher. So it is leading only because of a reason, because they innovate and are not only focused on generic, pharma products.
Okay, fine.
So
Go ahead,
yeah.
please.
Moving on to the
So,
growth
which
outlook.
is a company which is purely non-generic company in India?
Sir, I think we can take Sun Pharma as one because it primarily focuses on R&D as well. That's why.
No, which is purely 100%, non-generic.
100% non-generic.
This is a company
Uh,
owned by Kiran Majumdar. What is that the company called?
so
Biocon.
just
So Biocon is
yeah,
not at all
yeah,
making any generic products. Okay, fine. So
yeah.
they're into totally R&D and coming out with uh,
Yes, sir.
innovative products.
Yes, sir.
Okay, fine. Go ahead.
So, moving on to the growth outlook. So, the industry is at a turning point, moving from a volume driven model, focused mainly on low cost generics, to a value driven model with greater emphasis on innovation, specialty drugs, and biologics. Domestically, the demand is set to rise sharply, and reasons for this is because lifestyle diseases such as diabetes and hypertension are increasing in India, and an aging population also means long-term medication needs. And also, government schemes like Ayushman Bharat are expanding access to healthcare, creating opportunities for both essential generics and advanced therapies. Also, globally, India retains its position as the world's pharmacy, thanks to cost-efficient manufacturing. But companies are no longer satisfied with just volume, but instead they are expanding into regulated markets like US and Europe, and pursuing partnerships and acquisitions overseas. Companies are also investing heavily in R&D and biosimilars, moving up the value chain. When we look at companies like Sun Pharma is strengthening its specialty drug portfolio, Dr. Reddy's and Biocon are betting on biologics and biosimilars, which can fuel long-term growth. And Cipla and Lupin are doubling down on chronic care, especially respiratory and cardiovascular treatments, which match India's domestic health needs in current scenarios. Uh, so,
अब इसमें क्या हो रहा है आर्यमन, because
so,
you are presenting through an Excel sheet
हाँ जी सर.
and the words are too small for me to even read at all. So uh, whenever you're presenting, of course you should make the words little look bigger so that, anyone who is going to the presentation, he can also read certain things. Of course, what you are saying out of that only. बस
Yeah,
थोड़ा सा प्रोजेक्ट को आई मीन योर प्रेजेंटेशन को थोड़ा अपील करने के लिए यू शुड आई मीन पुट देम इन अ पीपीटी which is always a better mode. Okay, but of course, if you are presenting through Excel sheet, because most of the items are coming in Excel sheet, so uh, it's fine. But थोड़ा सा इसको और अच्छा कर सकते थे. But anyway, go ahead, please.
still while submitting, we'll take care of this for sure.
Okay, no, no issue. I'm just saying for the future, basically. What you have
Yes,
done
sir.
is okay. I mean, I can just go through the Excel sheets later on.
Definitely, sir. Definitely.
Okay.
In short, the growth outlook is clear. Indian pharma is not just sustaining global supply; it is also evolving to lead the next era of healthcare. We'll move on to market share, which Nishtha will cover up.
Sir, can you read the screen now? I've increased the font size.
Yeah, yeah. Yeah, Nishta, I can just see. Yeah, it's absolutely. So you are making the this thing. You're
Yeah,
controlling.
I am presenting.
Okay, okay. Now it's quite good. I mean, this okay at this level. Fine. Market share.
Okay.
So you can just,
Uh,
yeah.
Sure, sir. So, the Indian pharma industry, it's very huge and very competitive. There are thousands of companies making medicines, from small generic drug makers to big MNCs. And no single company really dominates the market. Even the biggest players like Sun Pharma, they hold very modest market shares. This shows that the market is quite fragmented. So, because there's no one single dominant player, we this also leads to there being price wars, strong competition, and very thin margins for the companies. Because if you talk about industries like telecom, where Jio, Airtel have 30% plus market share each, pharma as an industry, it is quite fragmented, because as you can see that Sun Pharma, which is one of the top companies in India, it holds only 8.3% of the market share. And similarly, Cipla and Torrent, they also hold quite less
So it's
market share.
all basically all it's widespread as you're saying.
Yes,
So there are a
and
lot of companies. So they hold, like 4 to 5% of the market share each of one of them, and the highest
yes,
one,
and
like Sun
this
Pharma, is
also,
holding 8%.
yeah, and this also affects the prices that they make, because there is intense competition. These companies have thin margins, and they're always in some kind of price wars.
Acha, tell
So
me, Nishta, what is happening is that we keep hearing, quite often that, a lot of people from US, they come and inspect the plants of all these companies. Okay. So why
yes,
they are coming and doing that?
so this is because there are very strict rules and regulations that the government have set up for these kind of companies, because they are directly operating in the healthcare market. And if, let's say, they're not following some rules that they are meant to follow, it will directly impact the health of the citizens of the country. That's why they always need to maintain the basic standards that
So
the
basically, they should have the processes which have been laid down as per the standards of US. So they have to maintain those standards, okay, because they are maintaining, mostly they are generic product manufacturers. Okay, so maybe the US is, trying to see, whether they are, manufacturing those medicines strictly as per the brand original, because all these original brand people who had actually, the patent was over. Now, Sun Pharma, Cipla are manufacturing the same, replicating the same, medicines. So are they exactly manufacturing and putting all the, kind of ingredients into their, medicine, which was done by the original manufacturer? So maybe that would be the reason. That is what is my take. Okay, fine.
yes, sir.
Okay, go ahead, please.
uh, so next, we move on to the cost structure that is followed in this industry. So as we can see that raw materials and the first to cost, they're quite dominant, because they take into account the biggest chunk of the cost.
Hmm.
So the Indian pharma sector is not only a very key part of the healthcare industry, but also a big global export leader. Um, the cost structure have been broken down into the following as you
Yeah,
can
yeah.
see.
So raw material constitutes almost like 40% of their total cost, as you're saying, okay?
Yes, sir.
And
and
even
and it's
the employee
mainly.
cost is also employee and admin cost is 8%, okay? Though of course it is not very big, but because maybe that they have some good trained staff who is
Yes, sir.
involved into manufacturing of these drugs. So that's why the cost normally the industry cost is around 5 to 6%. So it's 8%. That is my take basically. So why
So,
it
so
is more because of
what
the
I felt
highly
was
skilled
that
work.
it's sorry, sir.
They have little highly skilled people compared to the other industries basically.
Yes, sir, because they need such experts to work in R&Ds to
Yeah.
to innovate new drugs.
Okay.
That's why probably the cost is higher than other industries. And for the raw materials, the main cost in the raw materials is from APIs. India still exports around 60 to 70% of APIs from China, and this makes the costing of this industry very vulnerable to the global supply. That's the global supply
So
fluctuations that
what are
happen.
they importing from China?
APIs, active pharmaceutical ingredients, and
Okay.
that is the biggest part of the raw materials. So out of the 40% cost in raw materials, around 60 to 70% is from APIs,
Okay. Okay.
and India is importing APIs from China, and
So it's
this,
called API.
yeah, active pharmaceutical ingredients.
Okay. Active pharma ingredient. Okay. Fine.
Yes, so this again makes the pricing very vulnerable to the global supply fluctuations that keep happening, or the currency fluctuations that keep happening.
Okay.
So next, when we talk about the second point, this industry requires very energy intensive processes like chemical reactions, solvents, and because of that, the power cost is around 10 to 12%, which is, I mean, the number is not that big, but if we talk about the overall cost.
10% to 12% cost is power, which is a good number basically. Okay.
Yes, and the rising electricity and fuel prices, they directly impact the pharma margins, because again, the power prices are a big aspect of their cost.
Okay.
So R&D again is around 15%, and this is one of the key differentiators for innovative drugs versus the generic drugs that companies make.
Okay.
Then we've already talked about employee and admin costs. Then if we move on to the regulations and compliance costs, the question you asked me like when I was presenting the market share aspect of it. So they need to so these costs include inspections, documentations, and maintaining the good manufacturing practices that they're supposed to maintain. And they need to they need to do filings with US FDA, EMA, and CDSCO. uh, that's a mandatory thing for global exports. So
Okay.
because the regulations are very strict, the cost associated with it is also 5%.
Mhm.
Yeah, then market distributions and packaging, it's pretty self-explanatory. So we let's not dive more into it. Then we can move on to the strategy part of our presentation, which will be taken forward by my other teammates.
Okay.
Yeah, good afternoon, sir. So, in this, we'll be basically covering the strategies employed by most of the
इसको भी
pharma
थोड़ा
companies.
बड़ा कर दो इसको भी just I mean make it little bolder.
Nishta, can you slightly zoom in?
Yes, so 1 second, it's not really important. I'm yeah.
So, better now?
Yeah, yeah, better.
So, the first major strategy is capacity expansion and global diversification. So, for instance, domestically, Sun Pharma has expanded plants in Gujarat and Himachal, while Aurobindo is ramping up facilities in Visakhapatnam. Globally, Dr. Reddy's has strengthened its presence in Russia and CIS through branded generic acquisitions, and Cipla is focusing on South Africa and North America. Contract manufacturing is also growing. Companies like Piramal and Divi's are scaling up CRAMS and CDMO operations. to partner with global pharma majors. So all of this is ensuring that Indian pharma remains both a production hub and a global partner. The second strategy, this also addresses the question you had asked Arim, where the second strategy is moving from low margin generics to high value products. So Sun Pharma is expanding into specialty areas like dermatology and ophthalmology, and Biocon is leading biosimilars development like insulin glargine in partnership with global players like Pfizer and Viatris. Also, oncology and immunology are key growth areas with Dr. Reddy's and Cipla investing heavily. Uh, Third, we can see a strong focus on backward integration and cost efficiency. Companies like Aurobindo and Lupin are investing in these in-house API production to reduce dependency on Chinese imports. This is something which got accelerated specifically after COVID-19, and the government's PLI scheme is supporting this transition. Firms such as Divi's and Loris Labs are adopting green and digital chemistry to reduce solvent use and energy costs. Lean manufacturing, automation, and AI-driven supply chains are also being adopted to bring down per kilogram production costs. This all in all improves competitiveness and protects margins. Coming to R&D and digital transformation, companies like Glenmark and Zydus are investing in new chemical entities, and Sun Pharma and Dr. Reddy's are piloting AI-driven collaborations to accelerate drug discovery and clinical trials. On the commercial side, we're seeing a shift from traditional medical reps to omni-channel doctor engagement with e-detailing, webinars, and AI-based marketing tools becoming standard. This reflects a transition from just being low-cost manufacturers to innovation-led players. And finally, coming to regulatory strength and global compliance,
Aryan,
India.
आपने कुछ बताया था AI, what kind of how the pharmaceutical companies leveraging the AI basically. क्या
So,
what is the how the AI helps them basically?
so for clinical trials and discovering drugs, it's being used by both Sun Pharma and Dr. Reddy specifically in India.
Okay.
And I think they're also using it for marketing tools and more of like sales towards the sales.
Okay.
Yeah. So the final area talking about global compliance. So India supplies about 40% of the generics sold in the US, with companies like Cipla, Aurobindo, and Sun Pharma filing 50 to 70 ANDAs annually. However, again, since they're supplying to the US, strict quality control becomes crucial, and avoiding import alerts from the US FDA is a key priority. Global certifications are also important, like from agencies in like MHRA in the UK, EME in the EU, and WHO. These are all critical for diversifying sales and reducing geographic concentration risks. All of this ensures Indian pharma remains a trusted supplier globally. And so, together, all these strategies position India to sustain its global leadership in the pharma industry and capture the next wave of healthcare opportunities. Uh, can we move to industry ratios? So, I'll be covering the first half of industry ratios. So, firstly, we use three specific valuation ratios: EV per ton capacity, EV to sales, and EV to R&D spend. So EV per ton shows how much enterprise value the market assigns per unit of manufacturing capacity. A higher ratio usually reflects a premium product mix or could also indicate efficiency from the company. EV to sales tells us how many times a company's revenues are valued in terms of enterprise value. Higher multiples suggest stronger growth prospects or higher margin businesses. And lastly, EV to R&D indicates how much investors are willing to pay relative to a company's R&D spending.
ठीक है,
And
that's very good. That's wonderful. Okay.
so, I mean, all in all, from what we got, Sun Pharma mostly is leading the industry with the largest capacity of 3,000 tons, and they have an annual revenue of 45,000 crores, which is above 45,000 crores, which
If
again
you
is
look
the
at,
industry.
the top line is Sun Pharma. Just show me.
Yeah.
Big.
Mr. Can you like scroll a bit right
No,
or
just scroll.
left?
The
Actually,
first company is what? The Sun Pharma.
one
Okay,
first
Sun
company is
Pharma.
Sun Pharma.
Okay, Sun Pharma, Dr. Reddy, Cipla, Biocon, or Window. So we are saying formulation capacity per ton. The highest is basically API oblique formulation capacity per ton. So what does it mean basically?
It's
Is it
basically it could be translated to their per ton capacity, how much they can manufacture.
okay? They're manufacturing. Okay, revenue in terms of the top line. So 45,000 crores Sun Pharma, followed by companies like Dr. Reddy and
Dr. Reddy's and Aurobindo.
okay, and Biocon is 12,500 and Torrent is 10,000. Okay. The third one,
Scroll a bit
annual
right.
revenue के बाद कौन सा है? आगे,
After annual revenue, it
enterprise value.
should
So
be,
in terms of enterprise value, you're saying Sun Pharma is the maximum, then followed
yeah.
by which is the second company?
Sir, I'll tell you. Dr. Reddy's is
Dr.
90,000
Reddy,
and Supply is
then
80,000.
Cipla. Okay, fine. Then this
So,
is enterprise value, then followed by next E के बाद जाओ अगला. Just scroll it a bit.
yeah,
This is
I'll tell you which
हाँ
is
हाँ
which.
यहाँ पर रुको बस यहाँ रुको. EV per ton capacity. Okay.
Yeah,
So the costliest is Sun Pharma. Okay, in terms of the in terms of enterprise value, so this is the costliest. Okay, the cheapest one
yeah.
is some is 2.9, which company don't know. Then EV
It's
upon
Aurobindo.
Aurobindo. Okay, EV upon sale again we have the Sun Pharma, which is valued very
So
expensive.
EV per upon sales is where Sun Pharma isn't leading. It's actually Torrent Pharma, which has 5.5 times,
5.2.
followed by Biocon, which has 5.2 times.
Okay, and in terms of EV upon R&D spend,
This is again Sun Pharma is leading with 18 times, followed by Biocon at 14 times, and then Torrent Pharma at 13.
so what does this ratio stands for? EV per I mean R&D spend. I mean ये क्या
So
है?
basically, it's indicative of how much investors are willing to pay, given that a company is conducting X number of R&D.
Okay.
So it could be indicative to how uh, like higher multiples typically indicate that investors are happy and reward innovation pipelines and focus on specialty regions.
Okay. So I'll just take it what you're saying, but I'll just like to go through myself also and understand what does it
Yeah.
mean. So it is EV upon R&D spend, you're saying. And
Yes.
the company like, the Sun Pharma is, the highest, sitting on the highest
Yeah.
ladder. So that means, the investors are valuing it more and compared to what R&D the company is
It
spending.
also
Okay.
it's also indicative that they're doing some specialty region, and recently like reports suggest that, like as I mentioned in the strategy part, Sun Pharma is branching out specifically into dermatology and ophthalmology and specializing in some products in these
Oh,
regions.
yeah, yeah, yeah.
So
ठीक
it
है.
could also be indicative of that.
So got it, got it. So now, I think this is a very good metrics which you have presented. Fine. Okay. आगे.
Yeah, so Shishti will continue
हाँ,
from.
सृष्टि.
So we also wanted to explore how PE firms and institutional investors really apply the valuation framework for these companies. So rather than give like a broad valuation, they also go through like a segmented valuation. So now we'll explore that. For example, when for branded generic players like Sun Pharma, Cipla, they usually have stable earning visibility, and they're usually typically valued on a PE or EV by EBITDA or PEG ratio. Then on the other hand, we have API and CDMO players, which are basically the ones who take contracted obligations and who who have companies who outsource their operations to them, like Divi's and Syngene, who are still in their like scale up mode. They don't have a stable earnings yet. So investors are more comfortable valuing them on an EV by sales ratio because their margins expand at a later point. Then we have specialty pharma, which have patented portfolios, which who are valued primarily at EV by EBITDA and free cash flow yield, since cash visibility is more important for them than their top line. Then for biotech companies, which are R&D heavy and loss-making firms, traditional multiples don't really work at all. Here, PE firms like to switch to pipeline valuation models like the risk-weighted NPV or even molecule-based pricing or price to pipeline value. And lastly, Nishta, could you scroll down a bit? Lastly, we have Indian MNCs like Pfizer India or Sanofi, who are treated almost like defensive FMCG stocks because they're valued on dividend yield plus a PE premium for brand stability. So the takeaway is essentially that pharma valuation is not just about picking one ratio, but picking the multiple that aligns with the company's revenue model, life cycle stage, and IP intensity also. So segmented values ratios are also important. Now we'll move on to the valuation of the pharma industry. Nishta, could you change the slide to pharma industry?
The companies we have selected is Sun Pharmaceuticals, Divi's Laboratories, Cipla, Torrent Pharmaceuticals, Dr. Reddy Laboratories, Mankind Pharma, and
थोड़ा
Zydus
zoom करो,
Life Sciences. Yes, sir.
just zoom a
Mr.
bit.
Could you zoom?
हाँ, it's okay now.
And the data is as per today at 11:37 a.m.
Okay,
So it's
okay.
the latest one.
So
This
this
is
is
the
after
price.
the correction which has happened, just recently, okay?
Yes, sir. This is taken today morning itself.
Okay,
The
so like
data.
Sun Pharma is having a market cap of 3,87,000, so it's the biggest one. Then
Hmm.
the second biggest is Divi Laboratories, then Cipla. Okay, so you have arranged them in the turn in order of
Yes, sir.
their
In the
market cap.
order.
Okay.
And that's it. Could you go towards the right, Nishta, please?
Then in terms of enterprise, just show me the enterprise value.
Okay. All right, sir.
So I just wanted to say that the enterprise value is lower than the market cap for most of the just for one company. Torrent it is higher, then Utility is higher than so the company is largely managing with their own equity capital is seems to be and less of
Yes, sir. A
debt.
lot of them don't have very much high debt also.
Okay, okay, fine.
You
Sales,
go, you go to the right, Nishta, please.
sure. So in terms of sales also, now Divi Laboratories having a sales of 9,000 crores, and in terms of market cap, it is the second one, isn't it?
Yes, sir. That is what I also found interesting. It's not a that big company, but the what I found out is it has like a very stable position in its
Just show me the market cap
KPI.
again or the enterprise value of Divi Laboratories. I mean, this is 1,50,000 crores. Okay, and then come back to the sales. Let's see, the top line and the bottom line. Is there any, inconsistency here? Like sales is 9,000, which is the lowest among all other companies.
Hmm.
And in terms of the earnings also, uh,
Yes, sir. So the thing I found basically for this is that they're a leader in their active pharmaceutical ingredients and intermediaries, and they supply to high margin regulated markets such as US and Europe, and they have very low competition in this area, so they're very highly valued through their
okay, okay. So that is the
metrics.
reason, as you're saying, that though the top line and bottom line are not one of the
Hmm.
lowest in the industry, but in terms of their share valuation, they have the highest. Okay,
Yes,
second
sir. And
highest.
not just that, they're perceived as like a safe haven within pharma because they also have they have like negligible debt, almost zero debt. They have very strong margins and they have predictable cash flows. They're
Just show me the
even
price to book
quarter on
ratio.
quarter. Their recent quarter on quarter increase was 26.6% in
Okay,
their
okay,
increase. Because of that, they're very highly valued, despite them having not a lot of sales comparatively to others.
okay. Just move ahead now. After earnings, what is there?
Yes, sir. Nishta, could you scroll?
And look at the price to book ratio also, it is quite high. And of
Yes,
course,
sir. Quite
you have
high.
Torrent, which is highest, but Divi is also 10. Then
Torrent is going high right now because they recently have acquisition that they're going to do of a company called JB.
look at the
So
price to sales, EV to EBITDA of Divi, which
yes,
is
sir,
among the highest. Okay,
it's very
let's
high.
show me the growth. Show me the growth. This thing, growth in earning, P ratio and growth.
Could you scroll down, Nishta, and go towards right? Yeah, for this table, go towards right for Divi.
So Divi देखो,
All right, left then please.
second वाला होगा. I mean, of
हाँ जी,
course,
second होगा. Left जाना निष्ठा.
after the Sun Pharma, it should be there. Here,
Yes, sir. Yeah,
Divi
Divi
Divi.
lab always a little right. Yes, thank you. They're very high. 20% analysts are forecasted.
Just show me the chart only. उसमें देखते हैं कि this is having a growth of 20%.
Oh, for the trading view chart you want?
No, no, not this. This
No.
only. I'm saying just show the growth, this thing column.
All right, the PEG ratio.
The PEG ratio column, the growth column.
Yes,
So
sir.
in terms of growth, we
Very
are
high,
seeing that,
2.22.
Divi is having 20%. I mean, Torrent is also growing equally good, but Divi is, growing almost double the, rate compared to the others,
Yes, sir.
basically. Okay, fine.
Because they have a very high percentage of change. For example, their quarter on quarter was 26%,
Okay,
0.6 increase.
okay,
And analysts are pretty positive about this, but a lot of them are also the sentiment is that's very overvalued at this moment as well
okay, okay.
because it's very high.
ठीक है तो आपकी क्लास भी है अभी थोड़ी देर में आई मीन आर यू
Uh,
जस्ट wrap
yes,
up
sir.
in next two
I'll just
minutes
wrap it up then, sir.
yeah
So for some of the companies, for example, Dr. Reddy's and Zydus, I couldn't really the growth was negative for them. Here it was minus 2.3%. So couldn't
Which
really
company?
calculate the yes, the Dr.
Dr.
Reddy
Reddy.
Laboratories
Okay.
and Zydus. The growth was like negative. For example, here it is minus 2.3%. The analyst said. So I couldn't really calculate the PEG ratio since it loses its significance with a negative EPS growth.
Okay. Okay.
If you could go up, Nishtha. So the basic is it's not just the numbers that are important, but adding like qualitative context also is Sun Pharma carries a premium for the stability. However, its US heavy exposure makes it a little vulnerable to its new 100% tariffs.
So all these
Then,
recommendations, what you have mentioned, they are
hmm.
coming out of from their trend view, or I mean, it's your own, I mean, assignment of recommendation based on the.
So it's my own based on purely the quantitative measures I've calculated. We can't just ignore the qualitative also though, because there are a lot more news that is coming out. For example, Dr. Reddy is developing a new drug, which for an HIV drug they're gonna sell for like a very lower cost at $40 per year, which is gonna definitely increase their revenues. Then Sun Pharma is also coming with a non-obesity drug right now, which again will increase their top lines. So but the recommendation is purely based upon the quantitative I've done here.
Okay.
Yes, sir. So to conclude, our relative valuation shows that the market is currently rewarding domestic growth for stories like Cipla and Mankind, and while they have assigned steep premiums to companies like Divi's and Torrent that already have a strong narrative baked into their stock prices, for example the merger and the segment leader. For investors, the key question isn't just who is the cheapest, but rather whose growth is also being underappreciated by the market.
Okay. ठीक है, that's all. Thank you so much.
Okay.
So,
Thank you, sir.
yeah, and then we can have, the last group, which is going to be, it's not 202. So, 210 we'll meet again. Uh, Ishani, Mananya, Ranjana, is that okay?
Yes, sir, that works.
So we have just a 10 minutes of break, okay?